Hey, all. Welcome in as always. This is one that many have asked for a long time. And how do you convince a friend, family member, a loved one, a colleague to buy Bitcoin? So let's make the case. This is going to include a lot of numbers and a lot of macroeconomic justification. So bear with us. Channel's about math, money, and freedom. And of course, not investment advice. So the key messages here when you talk about convincing somebody is, you got to keep it simple, don't sell, and educate as much as possible and focus on the technology adoption. That is really the key takeaway here. Now, what is money versus an asset? Money is a medium of exchange, a store of value. Characteristics has to be fungible, durable, portable, recognizable, and stable. This is what you tell your loved ones. And an asset is a resource that represents value and derives its value from underlying intrinsic value. Big difference. So let's go a little bit further. So fiat, everybody's talking about fiat currencies. Many people didn't know what a fiat currency was until the C-19 situation hit. But basically, it's not backed by anything physical, such as gold or silver. And many people still believe money is actually backed by gold. But it's not. And that's very, very important to realize. So the question is, will fiat as we know it die? Well, historically, the average lifespan of a fiat currency in most cases is about 20 years in the history of the world. And yes, over time, they do die. In fact, the US dollar is going to celebrate its 50th birthday in August of 2021. So it's coming up soon. And we'll see what happens after that. So 50 years is a good run. Now, fiat is backed by debt. The US government can never repay this debt. It's too big and it's just inflating too fast. Now, the only way the US government can escape the debt is to inflate out of it, and that makes it valueless through inflation. So you see some critical numbers here. The most important one is the percentage of GDP that debt is, and that's nearly 130%, which is staggering. So if they were to tax the US tax base to death for the rest of their lives, they still couldn't get out of this debt hole. And that's a very interesting statistic. And these numbers aren't unique to the United States. They're very similar to Europe. In fact, Europe printed more money than the US during this recent last, say, 16 months. Now, the question is, what is M1 money supply and why does it matter? Well, M1 money supply is the money that's typically being printed. Now, I won't go into too many details about exactly what it is, but the key message here is it's being printed so fast and they can print it to infinity. And it's not a problem. And it's important to understand that as well. Now, why does it matter? Well, if you look at these charts, it'll tell you, you have your M1, which is measured in trillions and trillions of dollars. Then you have your checkable deposits and your currencies and demand deposits, etc. You can look at all this for yourselves, but I'm going to talk a lot about that in a minute before we get deeper. Now, what is the impact of money printing? So this is a nice illustration I found. Basically, if you imagine each cup of water is $1 and you have 5 cups, and all of a sudden you increase the number of cups, you double the number of cups. Well, what happens? The same amount of capacity to fill them is there, which is that 40 ounces or whatever that is in milliliters. So you have to divide up the amount of water you can allocate to each cup. Now, the other analogy I prefer to think of is, imagine you have an island and there are 100 apples on the island and 100 people on the island, and each person has $1. Now you give everybody an extra $1. What do you think is going to happen to the price of the apples? It's real simple. They will double. They'll go to $2. That's the easy way to think about it and wrap your heads around the importance of money printing. Now, I put together an interesting study here. Really, it's to show how the increase in money supply inflates everything, including hard assets like stocks, real estate, etc. Now, this is a number. It's basically household wealth, which includes equities, mutual funds, assets at market value levels. And you can see the household wealth has gone from 7.04 trillion in the year 2009 to 22.3 trillion in Q1 2020 before C-19 hit. Very, very important. And you look at the household wealth today, Q1 2021, the most recent data I could find, that has ballooned to 37.4 trillion. So it went up 3.17 times in 11 years and 1.68 times in the last year. So the question is, if you assume the US households in 2019, the stat is 120 million US households, the increase in wealth over the last 12 months is 15.1 trillion. So that means the average wealth gain per household over the last 12 months has to have gone up by $125,833. The question is, has it? Now, the other way to look at that as well, and I'm very interested in your comments below wherever you are. Did your household wealth increase by 125,000? Because that should be the average number. Now, if you look over the last 12 years, the wealth has gone up 5.3x has yours. So if you had $1 million in the bank 12 years ago, say in 2009, do you have 5.3 million today? Now, what I'm trying to get across here is this is the Cantillon effect. The closer you are to the money printing machine, the more money you get. You look at the people that made a huge killing over the last 15 months, 16 months, and people like Jeff Bezos, whose net worth increased by, I think, $300 billion. Crazy amounts. Anyway, this is the point I'm trying to make. Yes, when money is flushed into the system, it floats the boats closest to the money printer. And that's kind of the real message. Now, let's look at a couple of other things. Inflation. So I believe 15% inflation is the norm today, and I'll talk more about that in a little while. But basically, if you assume the money printing is going up 20, 30, 40% over 12 to 18 months, you know that the stock market will probably increase by that amount. But if you just assume 15% inflation, and that means that the stock market has to go up by 15% just to stay flat. And that, what I mean by that is not generate any return. And that's really, really important to consider. Same thing with real estate. So let's talk about purchasing power for a second. And trust me, I'm getting to a point at the end of all this, but it's important you wrap your heads around this. So basically, the debasement of fiat means your purchasing power of your money fails over time. It reduces, it falls, whatever you want to say. And removing the gold standard has basically let central banks run amok and print as much money as they want. They can just press a button and create trillions of dollars out of nowhere. And that's the amazing thing about technology in today. But why is it important? So let's talk about inflation. So this is an interesting chart I typically look at. It's called the Case-Shiller Index, which is the National Home Price Index. And it's extremely accurate. Now, to unpack exactly what's being measured in CPI versus what is being left out, we need to look at this carefully. So the most egregious example is the housing component. Housing costs, including rent and home ownership, account for 1/3 of the CPI. But how this is calculated is important. So in the current CPI, the rent component ticked up by approximately 2.4% annualized. Now, the red line is based on how much the home might rent for. But if you graph the purple line, which is the value of the house, you can see there's a big difference here. So that means if you look at the indexes here, the actual inflation rate for property is more like 15%, not 2% per year. And you can see this very easily by going to Zillow and looking at how home prices have increased in your zip code over the last 12 months. It's 15% all across the board, no matter where you look, which is also tied into the inflation rate, which is also tied into numbers I showed with asset growth per family. But the distribution is not equal, and I'll get to that as well in a minute. So how inflation eats your wealth. This is also very important. So the blue line here indicates the actual hourly wage over the years, and the orange line shows the value of wage in 2020 dollars. Now, the purchasing power of this, say, for example, 25 cents earned in an hour's work in 1938 would be worth about $5 today, call it $4.70, based on the chart. And the highest minimum wage, when you adjust for inflation, was set in 1979 when it reached an equivalent of about $10.95 an hour. But its relative value has gradually declined in the subsequent 41 years, and that's the big message here. Today, a worker earning the federal minimum wage receives $7.28 an hour before taxes. And that wage was established back in 2009 and has set a record for the longest time without a raise in 11 years of purchasing power. So the big thing to consider, and part of what I stress in this channel, the only thing we are given on this planet is time. And if we sell our time and we sell it for a reducing wage over time, you're never going to become financially free. And you can see here the cost of apples, blueberries, houses, medical, education, gasoline, cars, you name it, are skyrocketing, 15% more on average. But your wage over time is going down. So another important thing of how it really eats away at your income. So a couple of key lessons I want to stress here. One, saving your fiat money is a losing proposition, but owning hard assets is a winning proposition. And just over the last 12 months, the stock market is up 35%. And the stock market assets are only held by the top 55% of people in the United States. And I'm sure it's probably even less in Europe. And the bottom 45% own no stocks or real estate. Now, the bottom 45% also earns sometimes close to minimum wage. And therefore, they can never escape kind of poverty or become financially free or wealthy without having hard assets. And Bitcoin is the hardest asset. So that's the first big message. Halfway through this presentation, I want to get across to you guys. But let's go a little bit deeper. So, how is Bitcoin different to gold? So everybody knows what gold is. It's been around for 5,000 years, and it's a very good analogy to compare it to Bitcoin. So you could argue that gold has a limited supply, but some people say it's just in the soil. You just need to dig deeper to get it. There's a lot of undiscovered mines. In fact, there was recently 2 huge breakthroughs of big gold discoveries. And there's also apparently asteroids that have quadrillions of dollars of value of gold in them that can be mined maybe by one of Elon Musk's spaceships, but who knows? So limited supply could be questionable. Easy to store? Hell no, gold is not easy to store. Bitcoin is. You can store it in your brain. Cheap to transport? No, very expensive to transport. And Bitcoin is. You can move $100 million worth of Bitcoin across the planet for $5. Simple to verify? Yes, you can see everything on the blockchain. Gold? No, there's a lot of fake gold out there. So that's just setting the temperature for the difference between what are considered the 2 hardest assets on Earth. Now, is gold, these are all the common questions that are start coming in now, but isn't gold the perfect inflation hedge? What happens if your loved one asks you that? Well, if you look at the price of gold, CPI adjusted, now I'm going to stress that, CPI, remember, CPI is not the true inflation. I'll talk about that in a minute too. Gold has not budged since 1970. If you look at the CPI adjusted rate of gold over the last 50 years, it has been flat. So CPI adjusted would be $1,000 in 1970. You still get the same today. So is it an inflation hedge? No, by no stretch of the imagination. Is it better than fiat? Yes. But cash is trash, as some people say. Let's look at Bitcoin versus gold. This is a super cool chart. So when Bitcoin began, it would cost 139 Bitcoins to buy 1 ounce of gold. Today, you can get 18.5 ounces of gold for 1 Bitcoin. Just think about that as kind of a flippening. And, one day, the value, the market cap of Bitcoin will flip the market cap of gold, and that'll take the price of Bitcoin to about $550,000. That should happen in the next 5 or 6 years or so, maybe 7 years. So let's look at another example. What would happen if you put $1,000 into Bitcoin every year for the last 10 years? So as usual, I run a truckload of numbers. So January 1st, 2011, what I did for this analysis, I took the price of Bitcoin as of January the 1st every year. And I imagine we invested $1,000 January 1st every year. So 2011, we would have bought 3,300 Bitcoin and so on and so forth. So we would have invested a total of $10,000 US. And the returns were astronomical for some years. So the first year we made 7,000% return. Second year, 154%. Third year, 6,000. Fourth year, 81%. Fifth year, 40%. Sixth year, 130%. Seventh year, 1,300%. Eighth year, we lost 71%. Ninth year, 89%. Last year, 307%. Remember, what's interesting, I'll step out for 1 second. You could have bought Bitcoin last year at $4,000. And for most of the year, it averaged about $8,000, $9,000. So the fact that people are complaining now that it's $33,000 shouldn't really. But the key message here is if you did that, if you invested $10,000 each year, you dollar cost averaged in, you would now have approximately $447 million. And that would be literally a 4.5 million% gain. And the average return per year is about 1,487%. So let's compare that to gold for a second. So if you put $1,000 into gold every year for the last 10 years, you would have $14,000. You'd invested 10, now you got 14,000. Your return is 43.82%, and you would now own 7.39 ounces of gold. Huge difference between gold and Bitcoin. But the important thing to know here is, and same thing applies actually to Bitcoin, but you lose purchasing power. So the actual value of gold has fallen by 9.7% over the last 10 years if you calculate it for the government published CPI. Important to stress that. Now, I'll go a little bit deeper. Let's talk about CPI today. This is a cool thing from Charlie Bilello. I hope I pronounced that right. And he stat ranked all of the CPI inflation rates for all the countries around the world. You can see Japan has a negative inflation rate. And then you've got other key countries, Portugal, Switzerland, etc. But let's look at the bottom ranking. You've got Venezuela, 3,000%. Argentina, 50%. And I know this channel has a lot of fans in Argentina. Turkey, 17.5%. Brazil, 8.4%. Russia, 6.5%. India, 6.3%. Mexico, 5.9%. Saudi Arabia, 5.7%. And US, 5.4%. There's also something that I did a while back because I found the correlation between inflation in a country and Bitcoin adoption was extremely correlated, which is super interesting. But the point here is the US is ranked number 8, which is not good. And remember, this is CPI. This is not the real numbers. Let's look at what true inflation looks like. So this is based on what's called the Chapwood Index. I pulled in the numbers. I think they've been shut down. They're not allowed to publish anymore because the data only goes to 2019. But you can see here, I took the inflation rate for the top 13 cities. So San Jose, San Francisco, LA, San Diego. And this incorporates everything: housing, food, medical, education, transport, you name it. And you can see that the true inflation average over the last 5 years was more like around 12 to 13% for most cities. Now, what does that tell you? And that's up to 2019. That does not include the big money printing years that happened over the last year and a half. So when I say 15% is the inflation rate, it's probably even higher based on the Chapman Index. That takes into account everything. So again, back to Bitcoin purchasing power. So inflation, it's clear it's silently robbing you. For example, I'll step out for a second. If you have $1 million in the bank today and you leave it there, and the bank of course won't pay you any interest, the purchasing power of that conservatively is worth about $540,000 in 10 years. So your money shrinks. You don't have $1 million anymore. Your equivalent of purchasing power will probably be a lot less than $540,000. That was an old conservative estimate I put together. But here you see that in 1980, $20 US dollars would buy you a lot of groceries. In the year 2000, less. Today, maybe 3 or 4 items. Whereas Bitcoin in 2011 would buy you some groceries. 2018 will buy you a car. In 2030, people estimate 1 Bitcoin will buy you a house. So that is what we're talking about here. And that is probably the most important message. But we'll go a little bit deeper. So why is Bitcoin called the hardest asset? It's because it is deflationary, because people are losing their coins all the time. And there's an extremely limited supply that can never, ever change. It's also the most secure asset. And we'll talk about that in a minute as well. But the point here is, by my calculations, there'll never be more than 14 million Bitcoins, ever. There's 52 million millionaires on Earth. So there's not even 1 Bitcoin per every millionaire on Earth. So just think about that. So again, as I always say, if you have 1 Bitcoin, you are in very rarefied air. So the other question that typically comes in is Bitcoin legitimate? Yes, Bitcoin is math. Its legitimacy is based on an open system of cryptography and the open source to verify that the transactions are legitimate. and it cannot be changed or tweaked in any way. That's what makes it so powerful. But isn't Bitcoin too volatile? Well, this is true. Bitcoin has had very high trading volatility. I went through that in my previous sheet. But when an asset increases by hundreds of percent every year, you can expect some volatility. It's not going to be a straight line all the way up. If it was, it would be too perfect a world. And Bitcoin's volatility is also decreasing over time, as you saw from my numbers. And once Bitcoin achieves more maturity and becomes a true store of value, of course, we can expect the returns not to be as high. But the next 10 years will be extremely important. And I'll explain why. So first of all, before we do that, won't Bitcoin be banned? Another typical question. Aren't governments going to ban it? Well, some of them are trying to, but they can't. So it's a global network with more than 10,000 nodes from around the world, and it's impossible to kill those. In addition, Bitcoin is digital. Banning Bitcoin is like trying to ban the internet. You've got your public address and you have your private key, and that's it. And it cannot be squashed or killed by any government. Is Bitcoin secure? Yes, it is the most secure computer network in history. And it grows more secure as more participants join the network. So as the network effect is implemented, so does the hash rate grow, and the Bitcoin price, of course, typically follows the hash rate as well. We've had a little bit of an interruption to the hash rate because all the miners in China were shut down and they were controlling about 60% of the hash rate. But it shows you how resilient this asset class is and how hard it is for it to be able to survive such a huge interruption flawlessly. No issues. So talk to me about smart money. What smart people are getting involved in Bitcoin? Well, here are some names that you may know. There's a lot more, but some of the kind of celebrity names that are either the best investors of the world or some of the smartest people on earth. So we have Paul Tudor Jones, Ray Dalio, Elon Musk, Michael Saylor, Mike Novogratz, Chamath Palihapitiya, the Winklevoss twins, who apparently created Facebook, Raoul Pal, one of the top macro investors, Barry Silbert, one of the key kind of super early adopters of crypto, Cathie Wood, probably one of the best investors of our time, Robert Kiyosaki, Rich Dad Poor Dad, and Mark Cuban, and many, many others. All of these are all in on Bitcoin to a large extent. So, am I too late? The last question almost that is on everybody's lips. So first of all, every new technology has an adoption curve. And this is the adoption curve of the internet on the far left. And sorry, it's a very fine line. And Bitcoin, and the thick green line, as well as other things like PayPal account adoption and other things. You can see that we are less than 1.5% adopted at this stage. But the speed at which Bitcoin is being adopted is faster than that of the internet, which in itself is crazy and very powerful. Okay, now you're apparently convinced, giving you all of the key macro information to say, okay, this is worth a flutter, as they say. The question is, how much do I invest? Well, don't risk more than you can afford to lose. Very, very important. Second of all, this guy, Ray Dalio, he's back. He believes everybody should have 20% into Bitcoin as part of their portfolios because he believes it's an asymmetric bet. And this fellow is, again, one of the best investors of our lifetime, and he knows exactly what's up. So what's the game plan? How do we get started? So first of all, create a wallet for your loved one or your friend and show them how to use it. Get them on an exchange. Please use a safe one. Don't use a shabby one. And walk through the process. It's very simple. When they are ready, give your loved one their first Satoshi. Send them some crypto. It doesn't have to be a lot, but it's a great token. And I did that recently with a friend. Budget a small amount and use the DCA calculator so they can get started. Budget $10, $20, $50, $100 a week or a month or whatever you can afford. And check in on them. Make sure they are progressing. And make sure they keep learning. The more educated and the more informed you get into this space, the more you go down the rabbit hole, the more you become addicted, and the more you believe, and the more you see, and it becomes a very positive thing. So other things that I like to recommend is what I call the ultimate Bitcoin dollar cost averaging strategy. So first of all, buy $63 worth and get above the median of all Bitcoin holders on Earth. Second, use my model to calculate your Bitcoin insurance. That's in a previous video I'll link to up here. Third, get above the median ownership of all Bitcoin owners. That means you need to have 0.037 Bitcoin, which will cost you about $1,100 today. Number 4, if you can, to get into the top 5% club, you need 0.135 Bitcoin, which will cost about $4,300 today. And if you're really ambitious and you want to be in the top wealthy people on Earth in the future, get into the 1% club, you need more than 3.63 Bitcoin, which unfortunately will cost $100,000 plus today. But that will put you ahead of 99% of all other Bitcoin owners. And also just allocate what you can, dollar cost average in as you can, and everything else. So that's kind of the stepping stones that I'd follow. So quickly, in conclusion, we developed a simple strategy, discuss the importance of Bitcoin and how we are in a very unprecedented time. Fiat devaluation is here. Just look at history, look at what inflation can do to economies and people and family wealth, etc. It is enough to terrify anybody. And make sure you can dissolve any common Bitcoin misconceptions. We showed you how to address them. And Bitcoin is a personal journey. So let people come when they want. We're still so early, and some people will never get over the hump. But once people start studying exactly what this is, it becomes very automatic. Final note, conclusion, when I talk about this being the biggest asymmetric bet of our lifetimes, if you imagine the probability of Bitcoin going to zero, yes, there's probably a 1% chance of that. In fact, that's probably a very high probability. It's probably a lot less than 1%, but conservatively, say yes, over the next 10 years, Bitcoin could go to zero. There's a 1% chance of that happening. Bitcoin going to $1 million, I believe there's a 70% chance of that happening over the next 10 years to 2031. And if Bitcoin going to $500,000, I think there's a 29% chance of that happening. So your expected return on investment today would be valued, if you had one Bitcoin, that would be valued at $845,000. And assuming you bought today, that would be a 2,716% return on investment. That's it. So hope this helps you convince your network, friends, family, loved ones. And it's not hard. People are very conservative. You need to understand their personality types and just give them the information so they can make their own decision. Never force anybody to do anything. Thanks, everybody. Big thank you to everyone on Patreon too. Hope this wasn't too long. Take care all. Bye.